got Brian Skelly, William Raveis Mortgage, who proclaims to be having a big week, even with the 30-year fixed now sitting at a 7 handle the last few days. We dropped back under 7 there for a minute, Mr. Skelly, but you seem to be beating the odds, as you will. I will say mortgage applications are also up slightly year over year, but that's coming off of kind of a 1995 low mark. It's the lowest mark on mortgage applications since 95. We are up year over year for the same week. But Brian Skelly's up big in his personal business, beating the market. So tell us what you're seeing out there, Brian.
Yeah, it does feel busy. There's certainly activity. It feels busier than it was maybe 6 weeks ago, or maybe 3 weeks ago. It was a little quiet. But I did have kind of higher than usual number of buyers get their offers accepted. Some of them were folks that just recently started shopping for a home and I pre-approved in the last few weeks. And then, a couple of them were folks that I pre-approved a long time ago. And, I wouldn't say I forgot about them, but they were kind of not on my radar screen. And all of a sudden, they had an accepted offer on a house. So, there are folks still out there doing transactions as we move into the holidays. A lot of folks, maybe thinking about closing on a house before Christmas. And so, we're continuing to fill up the December calendar of folks that want to close by the end of the year. And I think, it's certainly not as competitive as it was during the first half of the year. There was a lot of people getting outbid in the spring. And so maybe some of those folks that had put home buying on the back burner for a while are getting back in the game and taking advantage of the seasonal opportunity that there's not quite as much competition.
Yeah, certainly not as much competition. We're also seeing consumer optimism. Chaz sent over the article on Fannie Mae Home Purchase Sentiment Index. Had a noticeable increase of optimism moving up, highest level since February 2022. So if you've got home buyer optimism moving up, you also just have a general optimism in the markets. I mean, look at what obviously the stock market has done since the election. Look at what Bitcoin has done. That number is unbelievable if you track Bitcoin. And so when it comes to money in the economy, it seems like there's more confidence right now in a time of year where, you do have seasonal opportunities. I always say if you're looking in Connecticut, November, December, best time to buy, no question about it. But are you also when you're talking to people the last week and a half, are you sensing more confidence?
It's hard to say. People don't just come out and tell you how confident they are. But I think, I was talking to folks in the last couple months that were saying they wanted to wait till the election's over. Since the election happened, nobody's mentioning it anymore. So nobody's saying like, oh, I'm buying a house because the election's over.
Nobody's waiting for the next election to be over?
No.
Nobody's waiting for 28?
But I'm glad that people have stopped using that as a reason to not pursue their dream of home ownership. So that excuse is kind of off the table. And I think, even though we really analyze in a lot of detail what's going on in the market and, day-to-day fluctuation in rates, and, if you're really geeking out like we do, where they say, well, it's not looking quite as aggressive for rates going down as it was maybe earlier. I think the general consumer, just driving around and listening to the news every once in a while, is hearing that rates are going down. There was a rate cut in September, which, the consumer hears that on the news. There was a rate cut in November, and, we'll probably talk more about what 2025 looks like, but I think folks are hearing that, election's over, unemployment is, staying under control. So I think people are feeling good. Yeah. And to your point, if you have money in stocks, I mean, not everybody does, but the folks that do have, even if it's just your 401k, if you take a look at your 401k balance right now, you're like, oh, I'm going to go buy some new shoes. I'm going to get a nice watch, cause you feel rich when you see even though you're not spending that money for 20 years when you're retired, you still feel better when you see that bigger number on your statement, and stock market's at all-time high, so it doesn't hurt.
And no question, Jerome Powell, though, this week tried to pour some water on the confidence. Obviously, the Fed chairman, Jerome Powell, after the week in the election, he cut rates. He comes out and says this week that, I don't know, guys, I might not be rushing to any more rate cuts given this strong economy. I have questions how strong that is, but coming out of Dallas, meeting there, Powell said there's no need for the Fed to rush the rate cuts, and he noted an economic growth, solid job market, inflation that remains above its 2% target. Although it is obviously getting much closer to that target, there's not a need to cut at this point. That created, certainly the bond markets to react. The 10-year Treasury did end of the week trend upward, which has kind of kept that 30-year fixed around 7 or just above it. And everything, Brian will tell you, everything's depending on your personal financial situation when it comes to rates. But certainly for the market number now hanging up over 7. Remember, October of last year, we were up over 8%. So the overall consensus that rates are coming down is absolutely true. But there's some stickiness because just a month ago, we were closer to 6% than 7%. And some of that stickiness has to do with how the Fed talks about the market, how the bond markets react, and obviously the job market, like you mentioned as well, Brian.
Yeah, I think, when unemployment first went up to 4.1, that was a little bit of a concern, and that did cause rates to go up in September because unemployment had gone up. I think Powell was happy to see that it stayed at 4.1. Sometimes it's easy to forget that in 2008, unemployment was over 10% when we had the global crisis. And when, 18 months ago, when inflation was at 9%, there was a lot of concern that in order to get inflation under control, they were really going to have to tank the economy, and that it could be pretty bad when you increase rates by a lot, like they did. That it could have been a lot worse. So I think Powell's relatively happy with the way things turned out.